All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for June 2nd, 2025. We are recording this at 7 p.m. Eastern Time, and this is episode number 479. My name is David Cosmeter. I'm the creator of TimingResearch.com, and today I have arranged for a excellent panel to join us. So Peter Schultz, Dan Passarelli, and Anka Metcalf are our panel for today. And the option professor is back to moderate, so I'm going to turn over to him.
Okay, thanks, David, and thanks everybody for being here. Dan, Peter, and Anka, and we got a lot to talk about because the markets are pretty much resilient here, and be interesting to see if you guys will think if it's going to continue that way. Today, particularly, we went way down and then came back up. So we're coming off of May, tremendous month, up over 6% on the S&P and up over 10% on Nasdaq. So let's start with Anka. Anka, what do you think June holds for us?
I think we're going to be bullish in June. So, from what I'm seeing in the market, really strong, resilient market. I think we're going to see all-time highs sooner rather than later.
I got you. And any particular stimulant for that?
Well, I think the market has a little bit of optimism right now. So everybody's hoping that the government is going to do something about the retail sectors, and not only that, but for the economy in general, for small companies and bigger companies. So they're just a little bit more optimistic. So far, so good. I mean, we're also seeing. I was looking at a chart earlier with the flows into foreign. U.S. equity ETFs, and the foreigners have started to buy seriously into the U.S. market again. So that to
Hmm.
me looks like a catalyst.
Yeah, a lot of people got squeezed out at the bottom, and they all haven't
Yeah,
come back yet. So you think that's going to be fuel for the fire too?
that's what I think.
Yeah. How do you feel, Peter?
Well, I think we're going to head higher, and here's why. So when we have this big downturn in April that you saw, the Magnificent Seven, all the stocks went down. They lost a lot of ground, and what's happened is they're finally getting to a valuation that's fairly valued. And if you take a look, it's those stocks that have really driven the gains over the last year or so. And I think as traders start to get back into these stocks, we saw pretty good earnings from Nvidia, and the only problem with the earnings was the situation in China. I think there's a good chance that that's going to be resolved. Trump's going to be on the phone with Z sometime this week. I think once the two leaders start talking, I think they're going to figure something out because it's in their best interest to do so. So once that happens and there can be a more open exchange of trade, I think you're going to see the Mag 7 start to lead again. We saw the NASDAQ higher today, the NASDAQ led. And so, in terms of rotation, I think you're going to see some money coming out of the defensive names that people have been into for the last couple of months. The Costco's, the Walmarts, the
Yeah.
insurance companies have done really, really well. And I think you're going to see rotation back into the techs. What's good from an option standpoint is this incredible volatility that you've seen, the big flush down, the on the upside you see several gaps there. The stocks just shot through the roof, and even more recently the volatility of just a week ago has really juiced options premium. So we're getting some really good premium for selling short-term out of the money options.
Hmm.
And I think that could continue, especially as there's the occasional tariff surprise that creates a little dip in the market, a little crash. So I think there's some good opportunity.
Yeah. And there's a G7 meeting on June 15th in Alberta that Trump said he's going to. So there'd be quite a number of leaders there that he might be able to strike some deals with, or at least work towards a tariff resolution. Because if tariff resolution were to occur, it would take a big monkey off the back, right?
Well, it would. And Trump just came out. I don't know if you guys are following this, but Trump just came out and said that he wants each one of the countries' best deal presented to him. This is so great. It's classic deal making. Presented by Wednesday. And so I think we're going to see some more agreements. I think everyone that happens is going to buoy the markets a little bit. And I think once we go over 6,000, we'll start to see the market run.
Yeah. If they want that new high, then they'll get going.
Exactly. And,
Hey
and you
Dan,
know
how are
how
you feeling about things, Dan, as far as where we are now and Do you agree with everybody that looks like upward and to the right?
Well, you know what? I love optimists. So that means I love Anka and Peter because you guys are wearing rose-colored sunglasses.
How did you know?
Yeah,
Well, I'm
that's
talking
Florida.
short term, Dan. You ought to hear my longer term forecast.
Oh boy, geez, Louise. Are you in one of those states that legalize marijuana? Uh, no, I do think it's possible that we could head higher in the short term. If we do get some deals that boom, boom, boom get knocked out, which man, I am hoping we do. That is, I mean, it's a almost certain scenario. But we've seen a lot of ups and downs, and we've seen a lot of on and offs. The PE ratio, the trailing 12-month PE ratio of the S&P 500 right now is 24. The 20-year average is 16. So I don't know. I mean, I think equities take tariffs and all the volatility out of the equation. I think equities are still kind of a smidge high. Um, put tariffs and all that business back into the equation, and here's my forecast. I'm not going to say I think the market's going to head higher. I think it could under the right circumstances. And, I'm not going to say I think the market's going to head lower. I hope it doesn't, but I could absolutely see circumstances that lead to that as well. But here's what I will say. I will say that I think volatility is likely to remain high through into the fall, into probably the fourth quarter of this year.
Mhm. Why don't we throw the VIX up there, David, and we can talk about that?
Wow. Look at that April spike. My goodness.
But it's clearly down by a base of 1819, and the question is do we go 1518 and the thing goes to 6200 on the S&P, or does it start going above 20 and we have a correction?
Well, while we're debating that, I'll give you a great trade. This is a moneymaker every single time. And that is when you see a spike on the VIX like this, one of the guarantees with every spike on the VIX is it's going to retrace because you just can't sustain that level of fear for very long. And so when you see it get up above 50 here, sell a call spread out of the money, give yourself a couple of weeks, and it always retraces. And you can make some really, really good money on that trade consistently. It just doesn't happen that often.
You have to make sure it's somewhat near the high. You don't do it at 40 and it goes to 60, right?
Well, the chart we're looking at right now kind of shows you the highs. And the thing is even if you get it off a little bit, if you sell enough time, it's gonna consolidate in your favor.
Yeah. No, well, obviously that's been the history of it. There's no doubt about that.
Yeah.
But now that we're talking about here and now, what about the here and now there, Dan?
Well, I mean, we're sitting, I just did a daily video on this. We're sitting here with the VIX at 1836 on the close here.
Yeah.
It's like really exactly where it should be relative to historical volatility. Historical volatility is kind of leveled off. However you want to measure volatility, whether that's option trader like with historical, or that's non-option trader like with ATR. They both pulled back quite a bit, but I don't know. I just looking at what's going on, I look at it as a bottom for volatility in the short term.
Mm-hmm. Which would favor maybe a further advance then, right?
Yeah. And actually, I like Peter's trade idea. I actually did something like that, a little bit different, a little bit trickier, for better or for worse. I bought some VXX puts, and I like those into the long term. I like those expiring in through December. But in the short term, I sold some puts, so it's basically a put diagonal.
Right.
So I'm kind of playing both sides of it. In the long term, I'm right there with Peter's forecast with his trade. But in the short term, I don't know. I don't see it going down all that fast from where we are now.
Hey, Anka, we had a big report on steel and aluminum tariffs, and a couple of stocks really took off, like Nucor, NUE, and Cleveland Cliffs, CLF, and also Steel Dynamic, STLD. Can we take a look at a couple of those stocks and get Anka's opinion whether she thinks there's more to come?
Yeah, absolutely.
Yeah, because
X
those are
as well. X,
story
a
stocks,
nice
right? Story
continuation.
stocks.
And actually, and sorry about it. I'm sorry about the fact that I'm having, some speaker issues.
Hmm.
And what I'm trying to do is I'm trying to log in on my laptop, but after I answer your question. So do you want to put up, if you don't mind, if you want to put up, all the charts that you spoke about, like CLF.
Well, STLD would be one off the bat. STLD.
Mm-hmm. Yeah, so it's spiked higher. It is still trading into resistance, but I see it bullish over today's high with a continuation into the high that we had, I think it was last November, into the 155. And
Just look at momentum.
it has a little bit of momentum. I like the
Yeah.
fact that it's, kind of like trying to chew up that resistance that we had from those two tops. So the first one was in February and the second one from May. And it spiked a little bit, but it doesn't show a lot of conviction because the price action came in. It just pretty much news-based price
Yeah.
action. But again, bullish over today's high. The stop, I would still go for a pivot into the 120, and I would have a first target into the 155.
Hmm.
And that would be, and at that point in time, we could actually decide, what to do in terms of a continuation. I do like the price point as well. Not a lot of stocks that are trading into the hundreds. Most of the stocks right now, like 300, 400, 700,
Yeah.
1200,
Yeah.
etc. So I do like it. I do
Yeah.
like it. And look at the volume. Like there's a lot of participation. The volume spiked as well today. So I think that's a positive.
Hmm. What about Nucor, NUE?
Um, okay. NUE, I'm not really loving it. We do have a little bit of confirmation today as far as the potential trend change that we have, that we can have going on. So in April, we had that bottom, let's say bottom just below $100. We created a higher low in the same month of April, so that was indicative enough that the price actions wanted to squeeze into, and I believe you're using the 20 SMA as well, the blue line.
Hmm. Well,
Okay,
David, what is that? 50?
No,
No, it's a
it's
50 day.
50 and
50.
200 EMA.
that's the 50. Okay, that's the
I,
50.
I
So
can
the
change it if you want.
50, yeah, so it went right into the 50 and then it pulled back. I like the fact that it proved a double bottom formation into the prior higher low that we have from April. And it looks very good. Again, the volume spiked today. I would say that it had, and all of these stocks have had like really nice pop-ups. I think that 200 SMA is going to be a problem because if you look back in time, we had a February high and the price action got rejected into that area.
Yeah.
Again in December, the price action got rejected into that area.
Yeah.
This is not a trade for me, but
Yeah.
it does look like it's a little bit painful, but it does look like it wants to trade a little bit higher.
Another stock that wasn't mentioned was copper and FCX. That took off pretty nicely. That might be a little bit more up your alley as far as maybe a follow through.
Yes, I
That
do
looks
have
like
a
it's ready to bang, 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 maybe, huh?
Yes, and I do have a position in copper
Yeah.
futures, and it's going really well. So I
Yeah.
got into it last week at 470.
Hmm.
And yeah, so very similar pattern, by the way, very similar pattern.
Yeah.
Today it
Only it
actually,
looks a lot better. It looks a lot like there's more to come, and it hasn't
right,
spiked up. It's not just a spike
yes.
up. This is more like a powerful
Hmm.
engine that's running and running and running. You know what I mean?
And breakout, yes,
Yeah.
yes. I do. I did like what I usually do is I gravitate more towards ETFs or
Oh,
stocks,
okay.
what have you,
Right.
when it comes to commodities. But
Yeah.
this time around, I did like the copper futures. I did like the gold futures versus GLD, for example. I
Right.
did like let's say oil. Oil did a really nice pop up today. So
Hmm.
I do like the breakout with the potential of continuation into this massive, massive, massive uh, resistance if we get above the 65 level because we have had problems into that area. Every single time we tapped it, we ran higher and then back to retest that 65, 66 area. So we were
Hmm.
back and forth from last September all the way to January when we spiked a little bit higher, just a peekaboo high above the 200 SMA, and then we came back in. But look at the beautiful base that it has, very similar to what FCX is doing right now, very
Hmm.
similar to what copper futures is doing right now. So
Hmm.
I still, I can't put my finger on. I mean, I'm not going to be a buyer yet, so I'm still sitting and kind of like watching to see if we have more activity into it. But like I said, I do like the higher low. I like the double bottom that it formed April, May, and then the nice coil around the 50 SMAs or the 20 SMA. Yeah, I could see it. It's the 20, the blue line, the 20 SMA, nice coil around it. And potential pop up over that area that could drive the price into that 200 simple moving average.
Yeah.
And
That's
why not? Maybe it will erase that and go into the high that we had in April, into that peak, into the yellow 200 SMA that we
yeah.
had.
Peter, are you doing anything with the gold? Because the gold had a good run, like
I
Anka was
have,
saying. Yeah.
yes, yes, and we have been in gold at 32.60 was our first trade in gold, but not,
Hmm.
yes, gold futures, not the GOLD or the GLD. So yeah, it's looking really good. It's
Yeah.
looking really good. I like it from the weekly standpoint as well. Um, Monthly looks very bullish. So I think it's pretty much everybody's probably seeing it as a hedge with
Hmm.
as we're heading into the summer months, as we're heading into, turbulence throughout this week, next week. Let's not forget that we're heading right into an FOMC week. We're also going to have the quadruple witch option expiration. I think it's going to be the week of June 16th. We're going to have the contract rolls into the futures indices. So the market is going to be really wild within that period of time. And with these with the um all this stock market definitely and earning season winding down. I
Yeah.
think this is going to be a little bit more of a safe haven here, hedging into the summer. So it may find, I mean, the volume wise, has really great volume and it popped really good today.
Peter, do you do anything with the metals?
Um,
No, Peter.
Are you talking?
okay.
Okay.
I was going to ask
Yeah.
Peter if he had any
Yes,
views on it as well.
I do. I think gold. This actually opens up a lot bigger issue, and that's of course the dollar and the debt, and also the bond market. So I think gold is a great long-term trade, and when you see it, bounce off of support, I think it's almost, it's just really smart to take a good position. So recently I did a trade. Dan just talked about doing a diagonal, and I really like diagonals because so we just I did some research on the gold stocks. I think the best gold stock out there, the majors, is Anico Eagle, and the ticker on that is AEM.
Sure.
And it's actually tending because the metrics on it are so good. You look at that big green bar up today.
Sure.
The metrics on it are so darn good that it's
Yeah.
outperforming gold itself.
Oh, yeah.
It's got some new production coming online that's going to be producing a lot more ounces this summer. So what we did is when you see this last dip of I don't know, 2 weeks ago or so, it just looked too good. So we bought a January 100 call. And then the idea is to sell against it. So we've got enough upside here where we're getting close to a sale, and then we sell against it. It's literally like buying your time wholesale. You're buying all these months of time. The cool thing about AEM is it has weekly options on it, so we can sell when the time is right. We can sell short-term options against it with the idea that they'll roll over and expire worthless. The cool thing about the trade is if they don't roll over, if you get called out, you get called out at a
Nice
price
profit.
where you still make money.
Yeah, sure.
So and you really don't want to get called out on something that's really rocketing higher and it's going to continue to. So if there's something, it's so interesting because everybody's talking about tariffs because those are the news that are creating this short-term volatility, and nobody knows what it's going to be, whether it's going to be good or bad from day to day. But that news is kind of overshadowing what's happening in the bond market. So right now the 10-year bond is around 4.5%. The 30-year is just under 5%, and those are levels that start drawing money away from the stock market. So it's interesting because, as Dan mentioned, the market is pretty highly valued right now. One way to value the market that takes relativity into account is the CAPE ratio, Shiller's CAPE ratio, which is inflation-adjusted returns based on the last 10 years. The CAPE ratio has never been higher since the only time it's ever been higher is at the height of the dot-com bubble. So I think it's some point, it's I think 3650 at the moment. So at some point, these deficits actually matter. We got a $1.8 trillion deficit. Bond prices are down 20% since September. Kind of doesn't matter until it does. So I think if there's a needle that could pop the bubble, I think that could be it. And one of the greatest trades to offset that is gold. And even better than gold is a really good gold miner. Gold miners have a higher beta than gold, so they go up faster as gold rises. They go down faster as gold declines. So I think gold's a great trade here. And we just looked at Freeport-McMoRan, and that's as much of a gold trade as it is a copper trade. So where you find copper,
they got both metals. Yeah.
Yeah, they do.
But
So yeah,
I love the fact that it's just going through the 200-day, and the thing used to be $60. I mean, FCX. I mean, I think that's the most impressive thing around is that, this thing is just going through the 200. Now, I don't know if it's going to really make it, but if it does make it, and you've got an ascending 50, and the RSI certainly are not negative looking. In fact, they're on the verge of acceleration to the upside if they get through 60.
you're
That's how they
exactly
go.
right.
Yeah.
You're exactly
So this is one that I actually talked about as far as getting into options last week, and they're already paying off pretty nicely this week. Yeah.
Oh, that's great. Yeah,
And
those two lines could
I'm
cross.
hoping that they will do accelerate to the upside. And at this point, it doesn't seem like there's any reason why they wouldn't.
Right.
You know?
Exactly.
So, with regards to any other gold, like I sometimes follow this Alamo Gold and this Goldfields GFI that I bought for like pennies is GFI. Check that one out. Yeah, hello.
That's
This thing
a
was like,
good trade.
yeah, this thing was like nothing, and now it's like, woof. Yeah.
Very nice.
I don't know what they're doing up there, but whatever they're doing, keep it up, huh?
Right.
Hey, Dan, what about these metals? Do you do anything with them, or are you strictly sticking with the S&P indexes mostly, or what do you think?
Oh my goodness. So much to talk about here, man.
I know. It's like a buffet.
Yeah. Yeah. So I cannot add anything better than what Anka said about copper for sure. I used to follow FCX quite a bit in the past. As far as gold goes, man, that's a crazy animal. I think that's high as a result of a lot of the uncertainty. And, Peter touched on the higher rates in the bond market. But let's not forget about the volatility in the bond market too. We had, oh geez, what was that? About a month ago, we had a 9 standard deviation days, as I recall. I was talking to a bond trader about that. Oh my God, in a row, which is crazy.
Mhm.
So, yeah, as far as copper goes, I got nothing. as far as gold goes, man, I'm an observer. I've got some in my safe, along with
Hmm.
some silver. But steel's kind of an interesting animal. So as far as steel goes, the big move that we had today, I've got to believe, has to do with the Trump saying the other day, oh, tariffs are going to 50%, and then no, just
Right.
kidding, only 25%. Not to mention the U.S. Steel thing, how that goes through.
Yeah, the
But
merger.
right. But there's a lot of volatility there because, like, what is steel? It's what you build societies out of. When the economy is going great, we need a whole bunch more. When the economy is pulling back, we don't need any more. So I like to look at a safer way to play it. And I think I have an interesting one here. So there's a stock, it's called Core Natural Resources, CNR, and they're not in steel, they are in coal. Specifically, they make a lot of coking coal, which is metallurgical coal, what they make steel out of. Now, while steel is all over the place and, lots of volatility and up massively today, this is a boring stock, right? And you look at it and it's just the ugliest chart you would ever want to see, especially if you're looking at the year version of it here. Like, geez Louise, down from over 130 to 70, right?
Mhm.
Almost 140 to 70. A lot of people look at that and say, no way, I'm out of that. But for a little bit of a longer term play, I love it. And I'm in that. I'm actually in the stock right now, but I flirt with selling puts as it dips, because the reason that stock is down is they had a combustion problem on one of their walls, which is kind of how they dig for coal. And so they had to shut it down. So they weren't able to mine for coal there. But that should be back online soon. I mean, it was supposed to be back online already. So there were some delays. So I don't know. I think any minute. So you look at it at these valuations, it's a 14 PE ratio, price to book ratio of under one.
That's
And
cheap.
yeah, it's super cheap, and they've got little debt. They've got a current ratio of 1.89. So I mean, what that means is they've got twice as many assets as they do debt.
So that's definitely a good one. Do you have anything else besides this one?
Well, that's my best one, Prof.
Ah, okay. Well, you got a JV team that comes with the varsity?
Let's see here. I don't know. I mean, I'm always watching gold. I mean,
Yep.
I'm always watching that. Um, and I, I look at it as a hedge just against physical, the actual spot.
Yeah.
But as I continue watching, just for any more craziness that pops up again in the bond market, we can see that pop right back up. Like Peter pointed out, when the interest rates in the bond market go higher, that competes for capital with the stock market. And when the stock market's down, gold goes up. So it's just it's a fun one to watch. I don't got a trade in it, but man, that's a fun one to watch and to play in the short term.
Sure, sure. Hey, Anko, Apple and Google seem to be dragging their feet a little bit here. Do you have any feelings on either one of these guys? Are they going to go in the tanker, or are they just playing
Well,
possum? Are they playing possum?
okay, can you hear me now?
Can we hear? You
Yeah.
should do that
Okay, perfect. Thank you so much. Yeah,
telephone.
I'm having some sound issues, but Apple, I do like Apple actually. I have been in this trade for some time now. I have added to the trade. I was looking to see if it's obviously going to break the double top formation, which it didn't, came back down. It developed like a triple bottom with a higher low, so I'm still bullish on it. It just
Mhm.
needs to pick up some steam here. So
Yeah.
I mean, I'm still bullish on Apple, still very bullish on Apple. And I'm not, it's not because I'm biased because I'm in Apple, but
Yeah.
yeah. So
You're not looking for a breakdown under 195 and then accelerate to the downside.
it could potentially. So I do have a stop at 190.
Yeah. But that'd be the
Yeah, so
risk,
I've
obviously.
raised my
Yeah.
stop. I have been in Apple for some time, so
Yeah.
my stop was way below 170, and when the market rotated, we picked it up on the daily, and we actually achieved like 5 or 6 targets into it. We had a really good risk to reward ratio here, but
Hmm.
we're still keeping some. So in the
Nice to
event,
see that RSI pointing back up, huh?
yeah.
Yeah.
Yeah, I was a little bit disappointed to see that the volume, so there are not many buyers
Hmm.
coming in at this point, but I love today's action. Love it. It actually is on the verge of producing another buy setup right there over 202. So the next pit stop is going to be back again into the 50 SMA.
What about the other guy, Google?
Google, I don't own a position in Google. I think it's from the technical standpoint, it looks a lot better than Apple,
Yeah.
and it's just consolidating. I love the fact that it's consolidating at the 200 SMA. I'm really big into this 200 SMA. I like it,
Hmm.
and I think it's very bullish over today's high into tomorrow. I
How
don't
about
have a
going up to
position.
fill that gap 200, 195 to 205? Is that going to happen?
Potentially. I don't really like the December lows. Whole month of December, we have like a triple bottom right there. So I think that would be like a first target, like 183, 185
Okay.
as a first. We dissolve that, we break through that, then we could continue higher, maybe into the 200s in there. But
Yeah.
I think overall, like all these stocks are going to be very bullish for the summer.
Yeah. And it's a big company that people who have to redeploy money will feel comfortable putting their money into
I agree.
because they have that moat around their business.
Yes.
Peter, is any stocks you're looking at that you'd like to share with the crowd here,
Well, yeah, I think there is
or
going to be
anything, you know?
rotation. There's going to be a rotation into tech here. I'd agree with that. And I think the easy names are the big ones. I really like a trade here on Google. If you have uptrending support there, it's about hitting it now. I think there's
hmm
definitely some upside. A trade we recently did that I like the fundamentals on is there's some secondary techs that are actually doing pretty good. Take a look at Twilio.
Yeah. I
uh,
always have a hard one with that one too.
yeah, TWLO. So here's what I want you to notice. So you see this last couple of weeks of an uptrend. So that was actually during a time where we had a little downtrend last week in the overall market. And what I love to see is a stock that's in an uptrend, and then when an overall market downtrend happens, it doesn't really participate. It just
Hmm.
goes sideways.
Hmm.
And when you see a stock like that, it's kind of like the sideways action is kind of like building a launching pad, and then it just gets ready to, as soon as the market starts to turn around, there's any kind of positive news, it just blasts higher. So they've really done well over the last year. They just cut a really good deal with Microsoft. And I think you're going to see this stock. You can see it's uptrending, going sideways, and there's a resistance point here just about at 120. I think it's going to break that, and then it's got a pretty free run to the upside. It's got a really nice gap that needs to be filled. So if you're looking
Yeah.
for some
Yeah.
upside in the tech space,
Hmm.
you can get it with the biggies, but sometimes these smaller stocks as a percentage run higher and faster. You also have an RSI. You can see where the RSI kind of dipped a little bit last week, but the stock didn't really go down. And now that RSI is heading back up again. So it's just one of those that people like the fundamentals. They like the story. It is really growing quickly. And I think you're going to see some more buying. This looks really close to a breakout.
We've got Broadcom's earnings coming up. AVGO. Did you see anything left in that
Well, let's take a look.
one?
Yeah, it's boy, it's right up
Buy the
against
rumor, sell the
resistance,
fact,
isn't it?
or what do you think?
Yeah, the thing is, if you wanted to play this, I mean, this could definitely turn lower, but if you wanted to play this, the safe way to do it is just put a buy order in just above that resistance, maybe 250 or a little higher, and say if that gets penetrated to the upside, you're going to be a buyer, put it in an automatic buy order. But I really don't like to game these kind of things when they're up against resistance and we're going into earnings. It's just too dicey. I mean,
Mhm.
they could blow out earnings, but people don't like
Mhm.
one thing that they say about forward guidance and the whole thing collapses. So it's
Mhm.
it's it's a hard thing to play with any certainty. So yeah, there's a good chance Broadcom will do well. I'm just not sure I'd want to trade it here.
Yeah. There's one that was trying to get going, and then their earnings came out, and they beat on all things. It was called Marvell Technology,
Right.
MAMRVL, and it still is holding this 60 as of today. And I'm wondering if there's, the fact that it's holding this 60, is it going to make a run for the 200?
So is that gap down from 3 days ago earnings?
A little bit. Yep.
2 days ago?
Yep. Yeah, because it was getting on the bicycle, and then that red bar kind of did it in, but there was no follow through. And the RSI is hanging around 50. So,
Yeah, with a rotation into the Texas, probably this could be a good bet right here.
yeah,
You're picking it up right at a support level. We have a general, since gosh, the middle of April, we've got a general uptrend. If earnings were good, yeah, this is, that, you bring up a good point, and that is if earnings are good with a stock, really the fundamentals are good, but there was some tiny little temporary disappointment in there that drove it lower. Kind of a good time to get positioned.
especially if they can't crack it. The trade desk was very good to me about a month ago, TTD, and it had a similar chart formation. So I was hoping that maybe there was some, you see how
Well,
it was down there and then pop.
yeah. So is that gap earnings related?
Yeah,
Yeah. Yeah.
yeah,
Good. And then you see this. This is great. This is a great chart. So you see that gap up, and then you see this kind of gradual decline as that gap up is digested. That's kind of a classic bullish flag pattern. And
yep,
usually you see a really nice bounce off of that once the consolidation's done.
yeah. Dan, is there any sectors that you're kind of focused on?
Yeah, yeah. Well, let's stick with tech. There's a couple that I find interesting there. I mean, one, if you're looking at some of these like Apple and some of the Mag 7 ones, I mean, here's one I like is Microsoft. I like Microsoft. I mean, it is sitting there at the highs and it is forming some solid resistance. I do want to watch the RSI because if it ticks down a little bit, we could have some follow through to the downside, but I still like it just as a fundamentally strong animal here.
Yeah.
So yeah, so the thing that I really like about it is that because we've got this total consolidation here, the historical volatility is just in the toilet. So
Mm,
yeah, so you can sell cash secured puts or put spreads and pick up some pretty overpriced options by doing that and play it not necessarily to the upside if it goes up great, but just as long as it doesn't go down too much, it's a winner. So
mhm.
I like that one. Another one that is one that I just I've been ciphering on for a little bit here, and I like what I came up with. RGTI.
Yeah, Rigetti, sure.
Yeah. I got to stick with the fellow
Quantum
Paisan.
computing. Yeah.
Yes, quantum computing. So it's one of those early stage things. So it's very speculative. But hey, those are the best ones to short term trade, aren't they? What I like about this one is that
Out.
yeah, it sure does. You look at the chart, and we're kind of, I mean, we had some crazy volatility back in December into January, and we're kind of in sort of a very, very, very broad range. I mean, like 100% range from like 7 to 14 or so, right? So if you want to play this one for some upside potential, but not be too greedy and have some protection, man, you can, like, if you just go to, which one do I have here? If you just go to the options and you look at just how expensive the options are, you can buy the stock and you can go and you can sell. I mean, right now you could sell like the 12 and a half calls for a buck oh five, about 9% of the stock price. They expire in 18 days. Actually, you know what? That's the one I put on a few days ago. What I'd actually probably want to do is go out a little further. Let's go out to like the 31 day guys. You could sell that at mid market, about, let's call it a buck 25. That's, you probably wouldn't get that, probably a couple pennies later, but it's a nice round number.
Hmm.
That's more than 10% of the stock price. Now, don't get me wrong, this can move more than 10%, but that's a pretty nice cushion to have for the downside if you like the stock for the longer term and you want to ride it carefully. What I like about it to the upside is, you think of covered calls and you think, oh, well, you're giving up all that upside. Look, if it goes up above 12 and a half, your upside's capped. Well, yeah, but if you can get 10% in a month, that's 120% a year. I'll just sell another covered call. I mean, if you think of a stock as a bond, as like a profit generating thing, I would take an annualized percentage return of 120%, especially with a 10% downside cushion that I can adjust every month. So that's one of the shorter term trades. Well, it's kind of a more medium term trade, I guess, that I like, but it's one that you can keep going as long as the stock cooperates.
Oh, absolutely. Hey, Anka, could you
Yeah.
explain a little bit how you're working your trading room in the in the morning? You kind of wait for the first hour of trading, maybe, or you do something where you try to establish what a where there could be an opportunity for a few hours and then call it a day, that kind of thing.
Yeah, I do that just for the futures, just for the futures, just for day trading. And actually all the trades, all the swing trades that I take,
Yeah.
even in commodities or indices, I take them in the first hour, basically. So I just focus on the power hour. I wait for the market to open. I don't trade pre-market futures. I don't trade post-market futures. So I definitely don't look at the market unless it's within the power hour. I wait for the market to open. I look at the economic releases. If we have data that is coming in around, let's say 8:30, which is very common, or 9:45, we wait until the data is out, but we kind of like pre-position for the trades. We don't initiate the positions. We don't have the order in. All the orders are limit orders. So it's nothing on impulse, nothing at buy now, or here's, what we need to do. It's literally a plan of action. So what we do is we wait for that release to be out. And if our parameters are set, we're going to be placing the trade. We pretty much know, like I said, where we're going to be entering the trade. We place our stops and we wait for the targets to be hit or stop out, depending on how the trade is going on. But that's what we do for the futures. That
Is it
is
kind of a
where,
momentum? Is it kind of a momentum thing? After it
yes,
shows its hand a little
we
bit, then
are.
you go, okay, well, I can see the momentum is going here. We're going to play it in that way.
Yes, we are, and I'm looking at the volume
Okay.
constantly. I'm looking at the patterns. I'm a pattern trader. I'm
Mhm.
in a trend trader, so I really rarely go against the trend. Rarely go against the trend.
Yeah.
When I do like to go against the trend, it's, for example, if we are in this massive power trend right now, and let's say we're going to get a dip, and I'm going to be looking at key levels to buy at any types of at any time of setup, rotations, whether breakouts or what have you. So buy it off technical levels. But that would be pretty much it. I'm not shorting the market as it's heading into the highs, as it's putting definite greens. So I do have patterns that have proven to work for the last 30 years that I've been trading. So yeah, so we're basing our decisions on those very high odds patterns. And for me, it's more like quality versus quantity. So I look for the velocity trades. I look for areas in which the price action has room to develop, room to hit and achieve targets. I like to go for 2 to 3 hours, 4 hours, etc. Now, in some cases, like for example, today we had a trade in NASDAQ, and this morning was, kind of a little bit painful to watch it because first we had a pop and then we have the pullback. And we finally nailed the pullback for like, I don't know, 40 points or something like that. But usually when we initiate a trade, we're looking for, I would say 90 points, 120 points or something like that. So very, very selective. I don't trade every day. So we have days where I don't call a trade. And we have days probably where we have 2 trades, depending on the momentum. So again, high volume. And we have been actually in a really relative low volume within the last 2 weeks. They have been, last week we had a short trading week and there was not much participation into the market. But anyways, this week, I think we're heading in the right direction. Although everybody was, and especially my European traders, were a little bit freaked out because of because of Ukraine.
The big bomb, and that was a heck of a bombing because
Yes.
I was told it cost $70,000 for them to put that together, and it was $6 billion worth of damage. So that's quite a deal they put together. And I guess there was an inside man who, because it actually occurred inside the country, and so boy, that was a real shocker, and it was also a real interesting thing they pulled off, huh?
Absolutely. It was very freakish. My European traders were really scared of what
Of
had
retaliation
happened.
from Putin, because
Yes.
Putin can't be too happy about getting blitzkrieg like that.
No, no, no. He cannot be super happy about that. And I think he's cooking something, like he's not going to let this go.
No, I wouldn't think
It's
so.
literally,
And
and yeah, and we can't even talk about Ukraine doing it. It was basically NATO, and that's why my European traders were really not liking it at all, the
yeah,
intervention. And because we have
yeah.
some traders from Poland, from France, from Spain, from the UK, and they're like, we don't like this.
Yeah.
We don't want to be dragged into a war. It's not our war.
They both have an interesting way of going into peace talks, that's for sure.
I know, right? And then, yeah, and then Zelensky said that he's going to send a delegation to
Oh,
Istanbul
gosh.
today.
Well, we're going to go around the horn here and let you guys talk a little bit about how you help investors. So you went into it, Anka, a little bit since you've got the mic. You might as well keep the mic, and you have the room that you guys have, and what else is going on that you try to do with helping people?
We basically have the stock swing trader because we were talking about stocks, and
Yeah.
we do have this service that is geared only for swing trading. And we have added a bonus to it for investing, and I do release some investing ideas there. But we're going to have a full-blown investing program that is going to come up this summer, and it's going to be on value investing. It's going to be like top notch education for traders, and they're also going to have the option to opt for swing trading. So we're going to have it all together. It's going to be really fun. So yeah, this is what we're cooking. So we have the trading room that is for income generation, to generate income, and that is only into the power hour. And then we have the stock swing trader where we call, like, for example, last night I called, I think there are close to 12 trades.
There were
Swing
a lot
trades.
of things to do last night, huh?
A lot of things to do. A lot of
Yeah.
things to do.
Now, in addition to the stock indexes, you do hit the commodities a little bit too, right?
I do. Yes, we
Yeah.
do. So I have
Which ones do you mostly do? The energy and metal, or?
Depends on the technical pattern.
Okay.
For example, the month of April was one for the records in terms of points in gold. So we have been writing gold throughout this year. It is my number one profit generator. And other than that, we have not traded out any other commodities, just gold. And we have
Right.
initiated gold again a couple of weeks ago, and we kept on adding to it because it dipped a little bit. We got in with half position, we dipped a little bit in, we added more, so we have a really great average 3260 or 3250 for the average. So we're good. We're doing really good. And again, all these trades, whether they are swing trades in commodities or they are day trades, they're all called into the first hour of the day. That's it.
Sure. Sure. Okay. Well, Peter, what do you have cooking that can help investors, and how do you go about, making sure you give some good information out there?
Well, what I try and do, options trading has gotten so popular over the years. I mean, I just noticed that the number of contracts has actually tripled in the last 10 years. So more and more people are trying to take advantage of it, and mostly by swing trading or directional trading, to get more bang for their buck, to get some leverage. And what we found is that so many of those trades, even if you do good research, you've got the chart figured out, sometimes stocks don't do what you think they're going to. So I like people to get into the game and stay in it. And the way that they do that is by being more consistently profitable. So what we're typically doing is selling overpriced premium with call or put spreads. And then that's fairly short term, say nine calendar days in duration. And then you take out the weekend. So that's only 7 days. So you have pretty steep time decay. And you're obviously trying to sell in the opposite direction that the stock is going. But even if you get that a little wrong and it just goes sideways, people are still making money. So the way that we retain subscribers is to make them money. And I know that sounds kind of simplistic, but
that's true.
I don't want them to take too much risk. And so if they get all of these characteristics of options on their side, the most powerful of which is time decay. If we can sell overpriced premium, it reverts to the mean. They just kind of tend to make money. So if you look at the chart here on the S&P, April was just a rip-roaring month. But if you look at May, it pretty much traded sideways in a range between 5,800 and just under 6,000. And, we do 2 trades per week. So that's May was a 5-week month. And so our more conservative kind of retirement style trades we typically do on an index like the S&P 500. We had 5 trades. Every single one of them was a winner. The average on that was around a little over 20% return in 9 days. And then on our more aggressive trades, we also had 5 trades because there's 5 weeks, and we lost on one that was 9%. And then the average on the others was around 25%. So 4 winners at 25, 1 loser at 9%. And the reason is because we take advantage of the natural characteristics of options to stack the deck, stack the probabilities. So if you kind of stack the probabilities on your side, even if you're a little off here and there, just generally you win. And so
it's got to manage those ones that get very volatile, so you don't.
Yeah, well, we'll definitely have stops, and options theory tells us that if you put your stop at the sold strike, you're going to cut your potential loss in half. So
you don't like to let them go in the money on you too far.
No, we don't at all. I mean, we stop out the minute the sold strike gets touched. So you're at a 50 delta there, and you just get out.
That'll keep the dogs at bay a lot more than if you wait till it goes in the money and next thing you know it's way in the money.
Yeah, you don't want to do that. You don't want to do that.
Especially with the short-term ones, because the short-term ones you're forced to take the loss because obviously, there's no time to hold on to them. You know what I mean?
no recovery. And then
Yeah,
the
that's
other,
why
the other
your exit strategy makes a lot of sense from the standpoint of, you do not want to be in there going deep in the money with no time on the clock, because then you're
yeah,
forced to take it. You know what I mean?
exactly. And then you're always selling your put spreads below support and selling your
Yeah,
call
yeah,
spreads above resistance. And then you
yeah,
go with the overall market. If the trend is higher, you're selling more
yeah,
put spreads. If the trend is lower, you're selling more call spreads. So,
yeah.
and then for our longer term strategy, it's like I showed you with Anaco Eagle. We'll
Right.
buy a longer term option, something
In
with
the right to short
as
again.
weekly options, and then sell
Yep.
against it when it
Yeah.
gets like two standard deviations from the mean into
Yeah. If you
three.
find a nice long-term uptrending stock, that's not a terrible thing to do at all. Yeah. Yeah.
Yeah, well, at a
And then
certain
the one you
point,
showed was clearly the poster child for that type of that's the animal you're looking for.
yeah, you're exactly right. Sometimes those are hard to find if we have a really volatile market, but boy,
Yeah.
that our
Some of the
goal
big
is
guys
just
have done it though. I've seen JP Morgan go on a nice long trend. I've seen IBM going on a nice long trend, a real train seal going up and back and forth, you know what I mean? So there are some out there just not just gold stocks, you know what I mean?
yeah, exactly. If people are not familiar with this strategy, I have just a short little tutorial at intro to cashflow.com. People can take a look at, give them an idea
Sure.
of what it is and
Great.
how to do it. Also, I just want to mention real quickly is a trade I like to the downside is oil. So it popped higher on the Ukraine, and it just reminded me because you guys were talking about it.
Yeah.
It popped higher on the Ukraine news, but Saudi Arabia it periodically tries to run all the producers in the Permian Basin out of business. So
Yep.
they just
Price war.
announced Saturday a
Yeah.
massive increase in
In
their daily
supply.
production of oil.
Yeah.
So
So
a spike.
this could be short-lived,
Yeah,
that's,
this is 1 day's worth of news, and I think shorten it somewhere in here is, and then Russia is really smart, and then Russia, of course, has to produce oil to fund the war.
yep.
That's their major export. So I think, and if you look at this downturn trend or this longer term trend to the downside, I think it's a good short here.
Yeah. Okay. Hey, Dan, could you fill us in on some stuff that you're doing for people?
Yeah. So, as you heard me mention a couple of things kind of across the whole spectrum of trading and investing, well, I do both. And so, you guys were kind enough here to put markettaker.com here in the webinar chat. And that is where we help option traders. When we do some of our like VXX trades, we talk about those. Time spreads is one that we love. Me and our other coach, John Kmisik, we love time spreads. In fact, I actually have a webinar on time spreads later this week. If you go to markettaker.com and click on join free in the top right, you'll get an invite to that webinar. As far as investing goes, I write a lot about investing with options, particularly covered calls and cash secured puts, to help build wealth faster. And I call that. I'm looking at Peter's publishing company here. I didn't know that was the name of your company. I remember one from a long time ago. But wealth building with options on Substack. So it's just wealthbuildingwithoptions.substack.com. A lot of words there. Maybe David will type it in the chat.
Okay, that's perfect.
Yeah. So yeah, I write weekly articles there. You can access my podcast there. Just lots and lots of free information to help.
Perfect. Okay, guys. And as far as Option Professor, my firm is concerned, we did have a seminar last Thursday, and we had a tremendous turnout for it, but we also had a recording. So if you'd like to pick up the Option Professor / Trading Indicators webinar, all you have to do is shoot an email to me at optionprofessor@gmail.com. And we will send it out to you. So again, if you'd like a free copy of the webinar from last week, we had lots and lots and lots of people. So it was a very good seminar. We're very proud of it. So yeah, optionprofessor@gmail.com, and we'll shoot you a copy. Anka and Dan and Peter, it was great to talk to you guys always. And we'll do this again. And I'm going to send it back to David Cosmeter.
All right. Yeah. Great discussion. Thank you, everyone. So that was great. So Yeah, just a reminder, be sure to subscribe to Timing Research on YouTube and Substack and your favorite podcast app. And you can also just go to TimingResearch.com and you can access this recording as soon as I can get it posted, as well as any of the past shows and events, over 10 years of history of doing events on TimingResearch.com. So, all right, just want to thank my guests again for today. Peter Schultz.
Thank you, David.
All right, yeah, thank you. Peter Schultz of wealthbuilderpublishing.com and also, sorry, I'm blanking, intro to cashflow.com.
Correct.
And all right, yeah. And Dan Passarelli of markettaker.com and the Wealth Building with Options Substack newsletter. And also Anka Metcalf of tradeoutloud.com and the Option Professor of optionprofessor.com. All right. Thanks, everyone.
Thank you so
Thank
much,
you.
David.